This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Stocks jump. The Dow tops 17,000 as the Federal Reserve gets set to end its stimulus program. What comes next for the central bank?
Mobile strength. Facebook reports a 90% rise in profits, but were investors looking for more to like?
Your financial future. We're all living longer, but can our pension systems afford it? Can you? All that and more tonight on Nightly Business Report for Tuesday, October 28th.
Good evening, everyone. Policymakers at the Federal Reserve kicked off a two-day meeting in Washington on interest rates. And on Wall Street, investors launched a rally, powering the Dow over the 17,000 threshold. Now, today's gains were fueled by confidence that the Fed will keep interest rates at super low levels, also helping a string of positive earnings, reassuring investors about the health of corporate America. And it was small cap stocks like biotechs and social media firms, not the big blue chips, that helped the beaten down Russell 2000 index post a gain of nearly 3%. Here's how things looked at the closing bell. The Dow shot up 187 points, the Nasdaq jumped 78 points, a nearly 2% leap, and the S&P added 23 points. Steve Leisman takes a look now at what top economists are expecting to hear from the central bank tomorrow and what may be next.
2 years and $1.6 trillion later, the Federal Reserve is set to end its bond buying program known on the street as QE3, or the third round of quantitative easing since the Great Recession. Wall Street is in general agreement that the Fed will vote to end the program, but the real question is, what comes next? According to the CNBC October Fed survey of Wall Street experts, the central bank is seen raising interest rates only in July 2015 and then hiking them only gradually, up to a final point of just 3.3% by the fourth quarter of 2017. That would be the longest, mildest rate hike cycle ever. The street even pushed ahead its forecast for the first rate hike amid growing concerns about growth in Europe and the spread of Ebola, with survey respondents twice as concerned about the global risk from Europe as they were from Ebola.
If the ECB doesn't get its act together and sort of thwart the deflation trends that are happening in Europe, I think they could drag us down. There is nothing worse for us in a disinflationary environment than to have to import deflation from Europe. So I think that's the thing that needs to be addressed, and if it is, we should be just fine.
In fact, Europe even ranked as the biggest threat to the U.S. recovery, outpacing slow job growth and tax and regulatory policies. Not to worry. 3 out of 4 respondents think the European Central Bank will follow in the Fed's footsteps and announce its own QE program as soon as February. Overall, the street maintains a fairly upbeat view of the U.S. economy in 2015, looking for 2.9% growth even while the Fed is expected to hike rates. The chance of recession, just 15% in the next 12 months. Oh, and not everyone is convinced QE is going away forever anyway. Survey respondents see about a 1 in 6 chance of another round of QE in the next 2 years. For Nightly Business Report, I'm Steve Leisman.
Home prices are still going up, just not as fast as before. The S&P Case-Shiller Home Price Index for the nation's 20 largest cities shows an overall gain of 5.6% in August over the year prior. That was just short of forecasts and the 8th straight monthly slowdown. Robert Schiller of Yale and a co-founder of the monthly index says slowing price gains may be a cause for concern.
We had a big increase and we've seen it kind of flattening out. And historically, that's a weakening sign, especially in the bubble state. Now, there's a big difference between California and, say, Texas or Colorado. California has just been very bubbly. Now that's where we're seeing the sharpest declines.
Detroit had the greatest monthly gain in August, up nearly 1% just from July, followed by Dallas, Denver, and Las Vegas.
Here's some other data out today showing mixed signs on the economy. Consumer confidence this month is at the highest level since 2007, thanks to job gains and lower gasoline prices. But orders for big-ticket, long-lasting durable goods last month fell by a surprising 1.3% instead of rising as expected. Businesses getting most of the blame for not buying more new equipment.
After the bell, earnings from Facebook, which saw a 59% jump in revenue last quarter on a big rise in mobile advertising. Social networking giant earned an adjusted 43 cents a share. That topped estimates by 3 cents. Revenue of $3.2 billion also beat Wall Street forecasts. Now, despite those numbers and a jump in active monthly users, shares were initially lower in after-hours trading, as you see on that graphic. Bertha Coombs joins us now from the NASDAQ exchange with her one big takeaway from Facebook's report. What is it, Bertha?
You know, it seems as though investors want beyond perfection. This stock hit an all-time high just ahead of those results today. It's up nearly 50% year to date. The numbers are all pretty strong. One of the things that the company has talked about on the conference call is that costs will continue to rise. Facebook continues to look to acquire other social platforms. They acquired WhatsApp, which is very popular in overseas and in Latin America and India. Also, they had also acquired Instagram. They're seeing growth there, and they are talking about perhaps that they may be having another acquisition in the works. So some investors might be taking a little pause. They might be taking a little bit of profit here. But compared to its peer, Twitter, Facebook is certainly performing on all cylinders. That
is really the comparison there. Yesterday, Twitter and that stock not doing well at all. Bertha, thank you very much. Bertha Coombs at the NASDAQ.
Also out after the bell today, earnings from biotech firm Gilead Sciences. The big news, sales of its blockbuster Sovaldi hepatitis C drug. This is the treatment that costs upwards of $1,000 per day, fell by 20% last quarter. With that, Gilead posted earnings of $2.05 a share, beating forecasts by 13 cents. Revenues came in at just over $6 billion, higher than estimates. Shares initially slumped in after-hours trading, but so far this year, Gilead stock up over 50%.
Before the bell, we heard from the pharmaceutical giant and Dow component Pfizer. It reported better than expected third quarter earnings thanks to cost cuts and higher drug sales in emerging markets, including China. That helped offset the loss of revenue from such blockbusters as Lipitor. It and other Pfizer medicines no longer are protected by company patents. But after narrowing its full-year guidance, Pfizer shares were up, but just by a fraction today. Meg Terrell spoke with Pfizer's CEO about today's results and the company's unsuccessful bid to acquire the British drug maker AstraZeneca for $119 billion in a tax inversion deal. Meg, what did Pfizer's CEO say about those proposed rules by Treasury covering inversions?
Yeah, well, Ian Reid has been really vocal about the U.S. tax system, saying that it puts American companies at a competitive disadvantage to their European counterparts. And he says these new proposed rules from Treasury only complicate that further, only put them at a further disadvantage when it comes to business development. He also said the fact that the Treasury has said that they may implement more rules or may suggest more rules brings even more uncertainty to the process, potentially stymieing deal activity. But what he said was that Pfizer is going to have to look at everything on a case-by-case basis.
So is he saying then that there is a chance that Pfizer will try another inversion deal? What did he say to you?
He didn't rule anything out. He said that Pfizer is looking at all different opportunities. But some analysts, like SunTrust's analyst John Boris, is saying that he thinks that instead of going for that big inversion deal, looking at something like an AstraZeneca again or an Activist, which has also been brought up, Pfizer might start looking at smaller deals, trying to maybe beef up its cancer pipeline, for example.
All right, Meg, thank you very much. Meg Terrell reporting tonight from New York.
Another Dow component posted strong results before trading began today. Profits at DuPont shot up 52% thanks to selling more nutrition and health products and paying less for raw materials. But after forecasting sluggish growth ahead in the global economy, DuPont shares were flat on the day.
And still ahead, new numbers show we're living longer, but will your pension be there for you? And what can you do about it? That's coming up.
Just 1 week to go before the midterm elections, with the candidates coming into the final stretch, spending a record amount of money on campaign ads. John Harwood joins us now from Washington with more on how much money is being spent and where all that cash is going. I mean, that is the question of the day, John. I mean, this isn't even a presidential race, and, you know, there's not too many doubts about control of the House. So why is so much money pouring into these elections, and why, and how much?
Because, Susie, it is such a close race for control of the Senate. In the House, 435 seats, but only about 20 are tightly contested. You've got a dozen races in the Senate that will determine whether Democrats or Republicans control for the last 2 years. That's why the total amount that's being raised and spent is about $4 billion this year. That's up from 2.8 years ago when Democrats were trying to win back the House and Senate when George W. Bush was president.
John, what's business doing? Which candidates, which parties are businesses or industries pouring money into?
Well, business tends, as a general matter, to be pro-Republican, and the biggest single sector in terms of campaign spending and donations is Wall Street, and that leans more toward Republicans this year than it has in the last couple of years. But there are some sectors which stand out as Democratic-friendly. High-tech, for example, you've got a majority of high-tech money going to Democrats. One that's really had a pronounced shift and is very heavily Republican this year, Tyler, is the energy sector, because President Obama is pushing an agenda on carbon emissions and climate change. 78% of energy money is going to Republicans this year.
So, John, which party is getting the most money? I take it the Republicans, or is it the Democrats?
The Republicans are getting more money this year. It's estimated by the Center for Responsive Politics that Republicans overall, the outside groups as well as the candidates and parties themselves, Republicans will get about $157 million more, but that's only about 4% in the context of a $4 billion election. And I don't think, Susie, it's going to make the difference in the outcome. These campaigns are going to be run on the ground in those states by local candidates, local issues. Money is not likely to be the deciding factor.
All right. We'll be waiting for those results. Just a few days to go. John, thank you so much. John Harwood in Washington.
The government is suing AT&T, saying it misled millions of wireless customers who signed up for unlimited data plans. The FTC alleges that AT&T failed to tell those customers that it would reduce data speeds, sometimes by up to 90% once they went over a certain amount of data use. It's a practice known as throttling. Nice word. AT&T says the charges are baseless, and unlimited plan customers are notified about the practice right on their monthly bill.
Apple and Alibaba, the Chinese e-commerce giant, might be teaming up. At a Wall Street Journal conference late Monday, Apple CEO Tim Cook boasted that Apple Pay had over 1 million activations in just its first 3 days online. And despite CVS and Rite Aid stores already disabling the system, Apple Pay is just getting started.
We've got a lot of merchants to sign up. We've got a lot more banks to sign up. And we have the whole rest of the world. We're only in the U.S. right now. And so we're just getting started, but the early ramp looks fantastic.
At that same conference, Alibaba CEO Jack Ma said he's open to using Apple Pay in China, but says both companies have to work together.
That's always, a good marriage needs both sides hardworking. And I respect Apple and respect him very, very much from my heart. I think he's doing a fantastic job, and I hope we can do something together.
Well, investors like the idea. Shares of Apple hit an all-time high today, closing at nearly $107 each. Alibaba shares rose about 2% to just below $100.
Coach posts results that beat forecasts, but investors are not convinced the company can turn around, and that is where we begin tonight's market focus. The handbag maker saw its sales fall in the latest quarter, and it predicts a continued plunge in revenue this year. The company also saw its slowest quarterly sales growth in China in 2 years, and it was relying on that country to help it make up for lost market share for retailers here in the U.S., to retailers here in the U.S. like Michael Kors. Shares tumbled about 6% today to $34 even. Aetna's quarterlies topped estimates, and it raised its forecast for the year, but still its shares slipped just a bit. That's because the insurer said Medical costs for some of its small business coverage came in higher than projected, and operating expenses were up. The CEO tried to reassure investors.
In the end, we'll meet annual guidance, and again, we beat and raised for the third quarter in a row. So we anticipate overall that our earnings and revenue all will come in fine for this year.
Shares down about 2.5%, or $1.95 to 77.23. Whirlpool missed profit estimates, but that didn't seem to agitate investors. Its earnings were up in the third quarter because of strong sales growth in North America. The appliance maker lowered its full-year profit outlook, though, because of recent acquisitions. That didn't faze investors either. Shares popped almost 7% to $168.06, up 10.66. And higher used car sales helped AutoNation deliver strong results. Also, the auto dealer group said it would spend $250 million buying back shares. The stock rose almost 7% to $55.58.
Big Blue also out with a buyback. IBM's board of directors authorized an additional $5 billion worth of stock to be repurchased. The company says it'll make the purchases depending on market conditions. Now, this comes on top of the remaining $1.4 billion left on its current buyback plan. The stock rose 1% to $163.60. Madison Square Garden may be looking to split up, a trend that we're seeing with a lot of companies these days. It's exploring separating its entertainment business from its media and sports operations. Its sports business owns teams like the Knicks, the Rangers, and regional sports networks like MSG. Its entertainment business hosts concerts. Shares were up about 11% to $72.99. Receptos surged in today's session on word that the drug developer's experimental bowel disorder drug met its main goal in a mid-stage study. The CEO explained the potential for the drug.
70,000 patients get diagnosed every year in the United States alone, approximately 700,000 patients in U.S. with ulcerative colitis. So there's a sizable opportunity here to make a real difference for patients and, of course, to be able to see substantive revenue as a result.
And Panera Bread reported a drop in quarterly profit, and it lowered its full-year earnings forecast. This comes as the food chain has been trying to speed up service at its restaurants. Shares dipped initially in after-hours trading, but then during the regular session, the stock was up $1.41 to $171.
Another report to tell you about, an interesting one. New statistics show that men and women in the U.S. are living longer than ever. According to the wild and crazy folks at the Society of Actuaries, the average 65-year-old is living well into his 80s. But what does a longer lifespan mean for corporate pension plans and your nest egg? Rick Jones is here to tell us. He's senior retirement consultant at Aon Hewitt. Mr. Jones, welcome. Good to have you here. These numbers are quite something. They indicate that life expectancy in the United States for 65-year-old men and women are up about 2 years. For women, a 65-year-old woman can expect to live to almost 89, a male well past 86. This means that pension funds will have to pay benefits longer. How much more will companies have to put into those funds to cover those benefits?
That's a great question. We anticipate that over time, the average traditional pension plan will see its costs increase on the order of 7% following the release of the statistics yesterday by the Society of Actuaries.
All right, so what does that mean? That you can't count on your company to help you through your old age and you're pretty much on your own? I mean, do we have to rely on our 401ks?
Well, the promises that have already been made in the pension plans today need to be stood behind, and there's federal laws that, as well as a federal insurance guarantee system that suggests that those pensions need to be secured to the extent that they're earned. On a go-forward basis, many more companies are shifting to 401k type of programs so that individuals are responsible for their own investments and managing their own stream of lifetime payments.
So with respect to those existing obligations, which you say are now going to be 7% more expensive, where does that money come from? Does it come out of company profits? Does it come out of the dividends that a company like General Electric might otherwise pay to its investors?
All of the above. It could be a cash need that would otherwise defray their ability to pay dividends or buy back shares or invest in other parts of the business. And it'll have income statement implications as well.
You know, one of the good news that we're saying we're living longer, but the bad news is that means we have to have enough money for the retirement. What advice are you giving people about how they should deal with their 401ks? How much should you contribute? How often should you contribute? And what are the risks?
Well, starting early, you've all seen the studies that suggest you start early. We suggest that you start at the beginning of your career and save on the order of 15%. Beyond that, there's things that you can do to control your own retirement, like thinking about the right retirement age for you, so you've accumulated the right amount, relying on automated features, target date funds, and other investment techniques which are intended to help you best manage your investments, and then effective drawdown techniques so that you can manage your dollars effectively over your life expectancy during your retirement years. So
two questions there. When you say timing your retirement age, I hear that as code for we better plan to work longer, Rick.
That's a good decoding, yes.
Very well. Now, let me ask you one other question without wonking out here. There have been quite a few companies that have taken their pension obligations and basically bundled them and, as I understand it, bought an annuity from a large insurer, whether it's a Prudential or whatever. What does that do to their obligation, and does it take their pension out from the insurance coverage under the PBGC?
Well, the part of your first question is, yes, it does take the obligation off of their books to the extent that they're fully relieving their obligation and shifting it over to an insurance company. That does mean that those individuals are no longer available for PBGC coverage, which is this federal insurance guarantee program for pensions. They would be eligible for the state insurance guarantees, so there's a shift from the federal pension guarantee to the state insurance guarantees.
All right, interesting conversation, Rick. Obviously, work longer, save 15%, and keep your fingers crossed. Rick Jones, thanks very much.
You're welcome.
Rick's with Aon Hewitt.
Coming up on the program, a big Indian conglomerate that thinks Americans are ready and willing to travel around on little electric scooters. That story next. Two of the nation's biggest airlines have already agreed to merge, and now they'll combine their frequent flyer programs. Early next year, American Airlines and U.S. Airways plan to merge their rewards programs, and they'll continue to base upgrades and free flights on how many miles customers fly instead of how much money they spent on tickets.
For most Americans, the idea of an electric scooter sounds like a quaint idea that will never take off here in the U.S., but one of the world's largest companies based in India thinks Americans are ready for an eco-friendly two-wheel ride. Phil LeBeau has more now on Mahindra and its growing presence here in the U.S.
It's called the Gen Z, an electric scooter that goes as fast as 30 miles per hour, travels up to 30 miles on a single charge, and comes with a battery pack you can take out and recharge in your house. Sounds great, but will Americans pay $3,000 for an electric scooter? Chairman of Mahindra says yes.
We're sitting here in Washington, D.C. I went to a dinner last night. I had to walk the last 4 blocks. It was as reminiscent of Mumbai as any other place, the traffic. So the traffic everywhere in the world is converging and becoming nightmarish. People are going to want very easy urban transport.
Anand Mahindra runs a company his grandfather started almost 70 years ago in India. Since then, it's steadily expanded. Its low-cost SUVs are popular in India and other Asian countries. And Anand Mahindra says he'd like to eventually sell SUVs here in the U.S.
That is certainly on our radar screen. That's one of our aspirations. You really don't make it in the vehicle business until you made it in the U.S.
Mahindra knows how to compete here in America. Its tractors have carved out a segment in a market dominated by John Deere's green machines. Mahindra's red tractors have become popular with those in rural America, looking for an option that is a little smaller and a little less expensive.
So there's something going on here in the US, which is about a transition to smaller horsepower tractors, as well as to tractors that are simple, rugged, and basic. And we seem to be in the right place at the right time.
Mahindra clearly has a foothold here in the U.S., but Anand Mahindra says he's just getting started. In fact, the CEO of this Indian company calls America Mahindra's emerging markets. Phil LeBeau, Nightly Business Report, Houston.
And finally tonight, if you've ever dreamed of owning an entire town, here's your chance. The catch? No one lives there. It's a ghost town, with some saying that the spirit of the former owner is still haunting the area. All 62 acres of Johnsonville Village in Connecticut, including a general store, an old mill, and 6 other buildings, will be sold to the highest bidder through auction.com with a starting bid of $800,000. And Tyler, you can get it just in time for Halloween.
It's pretty. That was a nice little town.
And you can get that little scooter to go with it.
All right.
That's Nightly Business Report for tonight. I'm Susie Garrett. Thanks for watching.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening. We'll see you right back here tomorrow.
Nightly Business Report has been brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
I'm Susie Garrett with the Nightly Business Report News Brief. The Federal Reserve kicked off a 2-day meeting on interest rates as Wall Street rallied, powering the Dow over the 17,000 threshold. Today's gains were fueled by confidence that the Fed will keep interest rates at super low levels, a string of positive earnings from DuPont, Pfizer, and Aetna, and a bounce back in small-cap biotech and social media stocks. The Dow shot up 187 points, the Nasdaq jumped 78 points, and the S&P added 23. Facebook posted a big earnings beat after the bell on a spike in mobile ad spending. Home prices rose again in August, but more slowly than expected. And consumer confidence is now at a 7-year high, thanks to lower gas prices and better job prospects. Be sure to tune into Nightly Business Report right here on your public television station.